So with there being so many different variety of strategies out there that people like to trade, I'm going to share with you today my own personal trading strategy and how I go about scalping and making money and have become a profitable trader over the years. Now, I didn't jump into it just overnight and become successful. I had my own hurdles and bumps along the way. And I believe I'm a little bit over 14 years now in trading. My first 2 years I struggled with because I had an issue with not being able to read the markets. All right. And the biggest problem I had was not understanding market structure. Just when I thought I knew that, hey, just having a strategy and a trading plan, it would make me money. Nope. I was making profit a little bit each day and then losing some the next day. Profiting. And so it was back and forth, back and forth. And I got to a point to where I was really, not say upset, but annoyed that I want to quit. But it was frustrating because I could not find a means or a level of consistency. Now, it wasn't until I actually figured out how to truly read the markets the correct way, following structure and price action. That's when the light turned on, where my mind finally clicked and everything started to come together, because then I was able to piece in a simple strategy that allowed me to start making money, pretty much, not say overnight, but consistently from week to week to week. So if you're someone that's starting off, I always talk about trading the micros to start off with. All right, you can use the Nasdaq futures, say for example, and the reason why I tend to kind of shift or levitate towards the Nasdaq futures and even the ES futures, but really the Nasdaq, is because I believe that you can take 2 trades from the Nasdaq futures and surrounding the micros and have a profitable day. Even trading the micros, you could come out to where you can make between 250 somewhere around that a day. Okay, and all you really need to do is take 2 trade setups. Okay, so maybe 240, 250 a day. That should give anyone a extra means of income. Some people that's your daily living, as far as how much money that you can make. Because you think about it, you compound 250 on a day, right? 4 days is $1,000. 5 days a week, that's $1,250 a week. Okay, that's pretty good money for a lot of people out there. Just depending on what your expenses are. Me, I'm very conservative in the style and how I actually live. So I don't need a lot of money. I don't have major expenses that I need to pay. So I truly believe, not creating so much overhead for yourself to where you got to constantly be trying to find a way to grind to make money. I am always level-headed and in a sense of I'm not trying to keep my head just above water. I'm not trying to drown. So I found a way to be able to trade consistently and profitably and make money to where I'm not having to worry about my means of living. I can live comfortable with not having to make thousands upon thousands of dollars every single week, okay, just to pay some bills with. But I'm not saying everybody lives like that. But some people may live in certain parts of the region of the country to where, the cost of living is a lot higher. But I don't want to get too far-fetched. I just want to go ahead and show you what I look at each and every day and how I go about doing it. Now, it's all surrounding structure. Again, this is an easy strategy for anyone that's trading the micros and as a beginner, because that's what I recommend. I'm just going to say that. If you're starting off, please do yourself the biggest favor and you don't have much capital to trade with, trade the micros. You can start with $500. If I was to really start off trading the micro futures and do it all over again, and I was really didn't have a lot of money in my pocket that I could take away from my savings, but I had some extra cash put to the side, maybe $1,000 I would will be my starting point. Okay, because that's going to give me some comfortability of in trading the micro futures to where I'm not having to worry about blowing my account over and over and over. And that's the biggest thing that you don't want to do is blowing your account trying to trade, and then you have to go back and try to make some additional income to put back into your brokerage account. Unless you're trading prop firms, and that's a whole totally different story. But that could put you or become a vicious cycle if you do not know how to trade the correct way, because you'll be constantly trying to, lose one challenge or 2 challenges, going back, putting more, to restart a new challenge. And in the end of it, a lot of people will say that you come out better funding your own account and starting that way. All right. So with the strategy, all it is understanding structure. So what I do is I pretty much use a higher base chart. Now I trade range based charts. looking at the 120. And please forgive me for the beginning part of the video or the rant or whatever the case is, but I'm trying to lay out a roadmap to give someone some tips or advice, something that would make sense to you at the end of the day. And that's why, you know, I like to kind of talk about the way I would personally do things, in a sense, if I was just starting off, okay, as a beginner trader. Micros. And the biggest piece of advice I can tell you right now, before I jump and move forward, market structure. Now, look, all you really need to do is use a higher base chart. Figure out what the market direction is. Are we making higher highs and higher lows, breaking structure to the upside, or are we making lower lows and lower highs and breaking structure to the downside? Now, and sometimes in between the market could be ranges. So if we see key areas like where the market is coming up, taking out major area structure to the upside, you should only be looking for opportunities to go long. Okay. Now, if we start to move lower to where we start to make lower lows and lower highs and taking out some structure to the left hand side, significant structure to the left hand side, then that's when the market is moving to the downside and you should only be looking for shorts. Okay, so let's say the market made and broke this high over here. We had a low, it broke that structural high right there. It starts to come down. When we were bullish back, now we are back bearish because now we're breaking structure to the downside, right? So now we got this low right here, and now we have a high right here. So we're in between a leg, say for example, coming to the downside. Now we broke structure lower. If we start to move back to the upside and start to re-break structure back to the upside, be mindful, this is your major high, this will be a major low right here, and we're starting to make higher highs and higher lows back to the upside. Honestly, you really want to wait to see if the market is going to break that major high to continue to let you know to take moves to the upside, because a lot of these little small swings coming to the downside can be considered as minor areas of structure, and this is your major area of structure. So I always tell people, either wait for the market to break a major high or take out a major low to help you identify which way you need to consistently or continue to trade with them. Now, a lot of times the market will make higher highs and higher lows and you'll be in between a leg. But if it's taking out, some decent area or significant area structure like above this high right here, then that will let you know, okay, I can look for opportunities on pullbacks to go long. Again, focus on your major high and major low. As well as up here, if you take out some structure right here, you can continue looking for long. So if we are making higher highs and higher low, taking out good structure or significant structure to the upside here, then look for pullbacks to go long. All right. So let's say the market doesn't break that major high, and then we got a major low right here, and then it makes this lower high right here. What do we do then? Well, we can continue to look for pullbacks to go long until the market starts to come back down and do what? Create lower lows and lower highs where it's breaking structure going lower. So when it does that, and now you got a major high, a low here, major low, and you got a lower high resting right here. Now you are in a wedge moving sideways, and it's kind of difficult to figure out, okay, what are we going to do? Because now we're in between this area, have a lower high here, okay? So what do we actually look for? Well, if it's made a lower high and it hasn't taken out the major high, and now we're breaking structure lower, I would look for pullbacks to go short, okay? Honestly, to go short until the market maybe starts to push back higher and then take out some structure back to the upside. So if we're making lower lows and lower highs to the downside, okay, and taking out structure here, so you got a low, lower high. This is a nice structural area here. Push to the downside, took out structure here. But again, I want to see something being taken out to the left here, a nice area structure as well. When it takes out, let's say this area right below 19,770 or 769, then I'll be looking for a pullback to this area to go short. And the market did react here. I took this trade sometime last week, but it was for a small scalp because you always got to be paying close attention to what's going on with price action as well, okay, as it's retracing back to a zone. Now, if we go back up and we take our structure above here, okay, and breaking area structure as we're making higher highs and higher lows within a wedge. Remember, that's a major high, that's a major low there, and we're taking out structure going back to the upside. Then I will look for a pullback to actually go long, okay? It's just a matter of following the flow of the market. Coming down, breaking structure, look for pullbacks to go short. Going back up, breaking structure, going higher, look for pullbacks to go long, okay? So let's say, for example, here, we're moving back to the upside. We take out this high right here above 20,093. At that point, I will look for a pullback to go long. The first thing I'm going to do is mark up my higher base chart, meaning I'm going to find an area where there was aggressive buying to the upside. Okay, this is a demand zone with an imbalance or gap. Now, if you don't know what I'm talking about the imbalances resting back at a zone, it's pretty much going to be on this candle right here. I've got videos here on the channel. If you go to the homepage, and use that little magnifying glass, that search tool, and type in gap or imbalance. A few videos are going to come up, and that way you can kind of educate yourself on that particular topic. Now, this being a aggressive area buying where there is a structural break, okay, caused by, well, probably either this zone here or this zone here. Again, this is a leg to the upside that broke structure. So this would be like the 50% area. This would be more so around the 76.4% area. I'll talk about that in relation to retracements, where they may want to stop at, but it's not always guaranteed. Sometimes they may come back and say that this is a demand zone right here. They may just blast to the upside after breaking this area structure, pull back to an area of demand that may be right here, and they go to the upside. Or it could be halfway through a leg or at the bottom of the leg. Most traders will tell you that to look for the opportunities at the origination or the area where the movement started to the upside, where the structure was broken. But I'm going to go ahead, because we got a structure break here. I'm going to mark off this area of demand here. I'm going to mark off this area of demand here. Well, why, Mike? Why both of those demand zones? Because both of them are high probability areas of aggressive buying, and the market can stop at any one of those and reject. So first, I'm going to mark up the higher base chart, the 120, with this demand area right here. Okay. I'm going to wait patiently as the market is retracing back to it. We're going to go down to my lower base chart, which is my 24 range. First, again, figure out what structure is doing. If we're breaking structure higher, look for demand setups. This is a high probability demand setup with a gap or imbalance resting back at the zone. Mark it up on your 120 range chart. Then I go back to, I'm going to move down to my, my 24 range chart. That is my entry chart. Now, you can use whatever charts you want to. Some people like to use maybe a 60-minute and a 5-minute chart. If that works for you and you're time-based trader. I want to say this right now. When it comes to range charts, they are not comparable or comparable to time-based charts. You got to understand that time-based is calculated based on time. Okay, when a candle closes, when candles open and close. Okay. Range-based charts are calculated differently, all right? If you want to find out more information about them, range bars, just simply do a quick Google search and type in range bars, okay? It's going to tell you, give you a lot of information about range charts and how they're calculated. And, you know, to me, they're just a lot smoother and easier to read overall. Now, again, let's take a look. I'm down on my lower base chart at this 24 range demand zone right here. Let's go back to this area here. This is a high probability demand setup right here on the 120. I'll mark it up. 1225, we'll go to that area now as the market is coming back down on the 24 range chart, the entry chart. Same area right here. At this point, I just want to be able to identify an aggressive area buying within the 120 range demand zone I marked up. That's that big blue box right there. What this is called is, I like to classify it as chart confluence. Multiple chart confluence where we have a zone within a zone. First zone we mark up based on structure is the higher base chart demand zone. Okay. Then as the market is pulling back to that area of the one on the 120, that demand zone we got marked up, we want to find and see, is there a 24 range, a lower base chart, high probability 24 range demand zone resting on the inside of the 120. If there is, mark it up. I like to go ahead. Lately, I've been marking them up with two different colors, outlining them so I can determine or distinguish the difference between the 120 and the 24. Now, this is the zone in within a zone approach right here. A beautiful strategy that is easy to trade to where you can make $250 a day, you know, just trading the micro futures. Maybe saying how. I'm going to show you here in a second. I'm going to do the calculation. Now, the market retraces back to my zone. Taps the 120. I've marked up a a high probability lower base chart, 24 range demand zone on the inside of the 120. Boom, it hits it to the tick. Once we're into the trade, you know, I like to get in either aggressively. You can get in here at the first candle break here and close at 19,923, or at the first candle close above this area here at 19,928. Take it back up where you get all of these gaps on these candles here, aggressive selling back to this small area supply right here at 19,944, and pick yourself up several, you know, a decent amount of points. So if I get in here at 19,923 and take it back up here to 19,000, say 944, all right, somewhere in that area, I can pick myself up 20 points on a move like that. Now, let's do the math right quick, okay? If you say, for example, we're trading the micros, make 20 points times 4, because there's 4 ticks in every point on the NASDAQ and on the ES, okay? That's going to give you a solid 80 ticks, all right? 80 ticks, what's the tick value on the micros NASDAQ? It's 50 cent a tick. It's not a lot compared to the E-minis, but you are compounding and accruing. Again, you can still make a decent profitable day every day, 5 days a week, $1,250 a week. Or let's say you want to make an extra $500 a week. Just trade 2 days a week. All right, so now we've got, let's do the math on that again. Sorry about that. 20 points times 4. That's going to give us 80 ticks right there. And then times the tick value, which is 50 cents a tick. That's going to give you $40. Let's say you trade three micro contracts. Again, depending on your broker, most brokers are going to be with the NASDAQ $100 a contract. So basically what that means is you need to have at least $100 per contract in your account to trade. So, again, if I was trading the micros, yeah, you can start off, whatever you choose to want to trade with. Not here to tell anybody how much to start with, but comfortably speaking, I would trade the micros, maybe $1,000, at a minimum. Okay. Yeah, you could do it with $500 or $600, but you got to understand, when you start putting lower amounts in your account, you shouldn't be trying to over leverage your account. Okay. That basically means, trading more than a certain percent in your account, because you could run the risk of blowing your account. So if you got $500 in your account, right, and then you start taking, you don't know how to trade the right way, then you're going to start taking major hits, and you're going to deplete that account fairly quick. So, safely putting $1,000 in a micro in a brokerage account, trading the micros, you've got some leadway there, even if you take a small loss here and there. So again, trading $20 points times 4. That's going to be 80 ticks times the tick value, which is 50 cents a tick. That's going to be $40 right there. So if you trade 3 contracts, that's going to give you that $120 on your first trade. Okay, again, $240, $250 a day is pretty much easy to do if you can trade the NASDAQ, picking up 20 points. 2 trades, that's all you need. Okay, if one trade, even on that's $120. All right, if you say, hey, I just want to take one trade and then allow that to compound on a weekly basis, on a daily basis, 5 days, that's $600 extra a week. So let's say you started with $1,000, just for example, and you took one trade a day, okay, and picked up $120. At the end of the week, you would have grossed $600. You do that times 4, that's $2,400 a month on top of the $1,000 you put in, right? So now you have $3,400, versus the $1,000 you started with. So you could do that, okay? Just trading one trade a day. That's pretty much the way that I like to do when it comes to trading. Is 1 to 2 quality setups a day and be done. Now I trade the E-minis. Of course, I've been doing this for a lot longer, but trading the micros, you can definitely build and compound an account. So again, if you start, but let's say this, we're looking to get to 250, right? That's $1,250 a week. You start doing that, and if you're able to accrue that on a weekly basis, let's say this $5,000 extra, a month, and you start it with $1,000. Then you can start moving up and maybe want to trade into the E-minis, because it quickly starts to compound fairly quick. You can definitely do this if you just by simply trading the micros, by taking very small steps in doing so. Don't go out there and leverage your whole account size. If you're starting with a $500 account or a $1,000 account and say, I'm going the max on all contracts that I could trade against the $500 or the $1,000, if you take your first hit. Okay, take your first hit, you're going to deplete a lot of money. You may go out there and start trading 6, 7, 8 contracts, and you're going to find out very quickly, trading $1,000, you take a loss to where you have maybe went from $1,000 down to $500 real quick, or $400, and eventually you're going to be out the game. All right, so this is what I want to share with you guys today. It's a simple and easy strategy and how you can go about, making an extra $250 a day trading the micro futures, which I really recommend anyone out there who's a beginner trader start. Now, before I move forward and close out the video, I want to say this to anyone out there who wants to become an elite channel member. Okay, it's only $6.99 a month. What you receive with that, guys, and I want to say thank you to everyone who is a member of that private community. So you can watch the public videos here on the public side of the channel, but where I go into much detail about the trade setups and break them down so you can understand the types of setups that, for one, that I post over on the Discord community. The Discord is free. It's the first link down in the description portion of the video. So if you want to join, just scroll down to the description portion of the video and click on the Discord link and you can join there. Right below that, there's a link that is for the elite, to become an elite channel supporter. Basically, all it is $6.99 a month. That's where you get all the trade breakdown videos. These are trades that I posted over in the Discord, as well as where you receive the video playlist and the great video that I covered on market structure for anyone that's struggling with that concept, because it is, I mean, telling you right now, it is the number one thing that you need to master and conquer is that one concept. But when it comes to the trade breakdowns, that's where I go into detail about setup after setup after setup. There are tons of those videos to where you can understand where to place your stop loss, where to place your profit target. You know, I walk you through market structure in reference to, or structure of the market in reference to what I'm looking at prior to taking the trade. It's like you're sitting right next to me because I'm explaining in great detail, in reference to these trade setups, one after another after another. There's so many videos there where I'm walking you through setup after setup after setup, so that you can understand and see and look for the same similar type of setups on your own on the charts, okay? But it really helps because it walks you through structure and let you know from my mindset what I was looking at prior to even taking a trade. So again, that's only $6.99 for anyone that's out there who's interested in joining that community. The link is down in the description portion of the video. You'll see it. Once you click on it, choose the second link, the $6.99 tier, and that's going to give you, direct access. Again, it's only $6.99 a month. That's like pennies on a dollar a day. Most people spend probably $7, $8, maybe somewhere around that area on a price of a cup of coffee a day, or whatever else you may spend it on, a breakfast sandwich. Just if you add that up weekly to whatever you're spending money on every single day, that could be $50, $60, $70. That adds up. Here's something that's $6.99 a month, and it can change the whole way that you look at trading and can help you out tremendously. Can't make any guarantees because you need to test it out yourself, back test it and forward test it. But I'm going to let you know, we have plenty of people that are part of the community that have found success and are finding success by joining, the elite membership and becoming a supporter that way. But again, that's up to you. I provide and make content so that people can pretty much educate themselves. I try to break it down as detailed as possible and walking you through the strategy, talking about structure, because I truly want to see people become successful. But you've got to put in the work. I'll say that now. Watch the video content. Watch the elite channel member videos. The trade breakdowns. You got to spend time like I did. I spent hundreds of hours, and watching video content, back testing, forward testing, all together. But I'm here to try to curve that so where you don't have to watch as much and spend as much time other than on the charts, because you really do want to be testing this stuff out. But that's all I have for you guys today. Just wanted to share with you and show you how it is definitely possible to, trade the micros and make you can make an income from it. Definitely so. People do it every single day. If you're a beginner, some people choose not to even switch over to the E-minis. They tend to stick with the micros and just maybe up their contract size because they don't want to, really leverage a whole lot of money into the market. But still, it's a solid way to make a decent income that compounds on the day. But that's all I have. I appreciate you guys taking the time to watch the video for today. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on your post notifications so you do not miss the video content and when I post it each and every day almost. But outside of that, I appreciate it. If you don't mind doing me the biggest favor right now, that's click that like button for me. I'd greatly appreciate it if you found some value in today's video content, especially if you're a first time viewer and a beginner trader. But that's all I have, guys. I wish you a great rest of your weekend. And yeah, we got a great trading week coming up starting tomorrow. So trade safe, and I'll see everyone over on the Discord.